welcome, gentlemen, and thank you so much for joining this forum. So today's topic is the mantra of wealth creation. That is something that excites everyone. And at Outlook Money, so many times we get these queries that how do I make 1 crore, or how do I make 5 crore? So these are, wealth creation is something that everybody is excited about, but wealth creation, according to us, has to be approached with a certain perspective. But to a large number of readers and people, creation is also about, of course, retirement planning. And in that context, creating an inheritance for their loved ones and the next generation. But of course, there are no shortcuts, like there are no shortcuts to making rupees 5 crore suddenly. So the patience to stay invested for the long-term clarity on goals and other aspects are something that can shed light on what you can do and what extent you can reach. So we have, the experts from the industry today who will kind of guide you on this exciting journey today. So welcome again. And let me start with the very basic question, which is also the topic of our session. And let me start with you, Mr. Shenoy. What is the mantra for wealth creation according to you?
That's a good question. I wish there was a mantra that I could tell you, but if I knew that mantra, I probably wouldn't tell anybody. But I think the thing that has worked for at least most countries, including India in the past, is consistent, disciplined investing over the long term. For most of us who are above 40, we've already reached a level of savings, right? So most people who are young, I tell them, don't bother about what your investing returns will give you. Focus on yourself. The more you grow yourself, that is the biggest CAGR you will ever get. You will make 100x your income by just upskilling yourself and growing in your role and your position in your education and so on. As you grow older, the investing returns start to matter more. I think so. The mantra changes over time as you grow. But I think financial assets are perhaps one of the better ways, or at least in the last few decades, it has been a better way to save rather than building assets in real estate or gold and stuff like that. And consistency is key in the sense if you keep looking at news, there will always be something to worry about. There was a war in Ukraine in 2014. There was Brexit in 2016. There was something ILFS in 2018. At all those times, it felt like the world was falling apart, but the world didn't fall apart. And if you had just continued investing through those phases, you would be a relatively richer person today. Even today, I hear comments as a fund manager, people calling up and saying, when the markets are close to all-time highs, they've made a lot of money, but the worry is still there. Should I take it out now? Because the market will fall. But they've been saying this for the last 8 months. So I think the market has gone up 30% in the last 8 months. So taking it out at any point would have been a miserable choice. And my answer to them was, I don't know. And I don't know whether the market will continue to go up. I have seen stages when even moves like this have been eclipsed by further moves twice this size. In 2007, in 1992, we remember the Harshad Mehta scam. How many of you know that that year was positive? So that year was a positive return year, so was the next year. So it is actually unbelievable to see 1990, 91, 92, 93, 94, all were positive, massively positive years. And we think of the Harshad Mehta scam as a big thing. We think of COVID as a big thing. If you look yearly, the returns of the Nifty were 8% positive. So it's sometimes just staying the course makes a difference. Over the long time, you probably will succeed more if just discipline keeps the key.
So, interestingly, we had a keynote right now where we discussed the markets a lot. And one of the things that, especially a lot of youngsters who, love investing through apps, etc., they think the mantra for really wealth creation is just to invest in stocks. But we also have that SEBI figure saying that, 90% of day traders kind of don't make profits. Anshul, I would like to ask you that what do you think? Sorry. What do you think of that, and how does one manage that?
Nidhi, very rightly put in by Saurabh. That's a very, uh, I will say, very disturbing data. Actually, factual data है, बड़ा disturbing है. 99.7% market का volume जो है, वो F&O में है. And F&O is not investing. F&O is trading. 99%, or rather, I'll say almost 100% of the traders, F&O is a tool to hedge. वो hedging कुछ होता नहीं है, चूँकि 5,000 रुपये लेके पोजीशन ले सकते हैं, वो ट्रेडिंग होता है. और जो यंग जनरेशन है वो अभी क्रेडिट मोड में है. तो अनदर डेटा विच वाज टॉकिंग अबाउट, तो आप अगर कोई भी ऐड आज देखें न्यूज़पेपर में या कहीं पर भी, तो अभी जमाना ना एमआरपी का नहीं है, ईएमआई का है. तो इवन आईफोन इज सोल्ड एज एन व्हाट इज योर ईएमआई टू परचेज दिस, नोबडी पब्लिशेस द एमआरपी, सो दैट इट वी हैव मूव फ्रॉम एमआरपी टू ईएमआई. सो ये जो इन्वेस्टिंग है ना, तो इन्वेस्टिंग कोई कर नहीं रहा है, ट्रेडिंग कर रहे हैं. तो ट्रेडिंग से भला हमारा होता है एज अ ट्रेडर हु गिव्स यू ट्रेडिंग प्लेटफॉर्म, एज वी अर्न ब्रोकरेज ऑन एवरी ट्रांजेक्शन, बट कस्टमर डज नॉट अर्न मनी बिकॉज वो उसमें थॉट नहीं है. बहुत सिंपल है ट्रेडिंग का पैरामीटर. ट्रेडिंग वर्क्स ऑन सिंपल फंडामेंटल प्रोबेबिलिटी है, लॉ ऑफ प्रोबेबिलिटी. अगर हम थोड़ा सा मैथ समझते हैं तो अगर आपने कोई शेयर खरीदा है तो या तो वो ऊपर जाएगा या नीचे जाएगा या बराबर रहेगा. तो 33% प्रोबेबिलिटी है ऊपर जाने की, 33% प्रोबेबिलिटी है नीचे आने की, 33% प्रोबेबिलिटी वहीं रहने की. तो 66% ऑफ द टाइम इन्वेस्टर ट्रेडर खुश रहता है, या तो पैसा बना है या वहीं खड़ा हुआ है, चलो नुकसान तो नहीं हुआ. अल्टीमेटली उस एंड ऑफ द ईयर वो देखेगा तो वो नुकसान ही होता है. तो आई थिंक trading is a very exciting thing, but not a one to create wealth. For wealth creation, I think investing is the most important aspect. Start early. तो और दूसरा एक जोड़ा इम्पॉर्टेंट है इसमें, हम जब इन्वेस्टमेंट करते हैं किसी भी चीज़ में, तो अब घर पे भी इन्वेस्टमेंट करते हैं, घर भी लेते हैं, पर आप उसके लिए लोन ले रहे हैं. तो आप जो भी एक इन्वेस्टमेंट कर रहे हैं वो आपको इंटरेस्ट उसके लिए देना पड़ रहा है या उससे कुछ इंटरेस्ट मिल रहा है. ये दो इंपॉर्टेंट एस्पेक्ट आपको देखने की ज़रूरत है. ओनली थिंग उसमें ये कि इमोशनल इन्वेस्टिंग आ जाती है. तो दो चीज़ें हैं अभी, या तो एक चीज़ है वैल्यू इन्वेस्टिंग या इमोशनल इन्वेस्टिंग. अब इमोशनल इन्वेस्टिंग में आपको बड़ी गाड़ी चाहिए, तो गाड़ी तो चाहिए, पर अब बड़ी या छोटी, यहाँ इमोशन आ गया. तो उसमें कहीं आप ज़्यादा इंटरेस्ट दे रहे हैं और वही काम शायद छोटी गाड़ी से हो सकता था, बट इसका कुछ पैरेलल नहीं ड्रॉ कर सकते बिकॉज पीपल आर अर्निंग मनी टू इन्जॉय लाइफ ऑल्सो. बट जहाँ तक वैल्यू इन्वेस्टिंग की बात है वो समझना बहुत ज़रूरी है, विच इज़ वेरी इंपॉर्टेंट टू थिंक इट एट द वेरी बिगनिंग. तो आई रिटरेट, जिसने किताब नहीं पढ़ी है सौरभ की, कॉफ़ी कैन इन्वेस्टिंग, प्लीज़ ज़रूर पढ़ें. और मेरी तो रिक्वेस्ट ये रहेगी कि जिसने पहली नौकरी में पहली तनख्वाह मिली ना, उस दिन उसको ये किताब पढ़नी चाहिए. देन he'll realize the value of that. It's a beautiful written book by Saurabh. That will give a lot of eye-opening things. And ये जब हम 40 साल की उम्र में सोचते हैं ना, तो थोड़ी देर हो चुकी होती है. तो थोड़ा पहले समझ जाएं तो बेटर है.
Okay, thank you. And apologies, Sushant. What I was wanting to ask you was that, like Anshul also said, that some people would want a big car, some people would want a big house or something else. So wealth creation may actually mean different things to different people. A person who is able to give a good education to their children, for them, maybe that's wealth. So how do you define wealth creation and how does it differ among people? So what is your view on that?
Yeah, no, I think you answered it yourself that you first need to define wealth for yourself before thinking about how to create it. Definitely, once you define it, then you have to plan for it and then execute it with discipline. As Deepak said, that discipline is the most important thing. So, first, you have to answer the question for yourself and then create a plan around it and then act on that plan. These are the, I would say, three simple things in your own mantra of creating wealth. Now, once you have decided what you want to achieve, then there will be various things around it. If you want to buy a house, then how you plan about it, what's the size of the house you are looking at, what age, what locality, etc., etc. So in each asset class, there are different nuances you will have to think about while planning for it. Uh, I'm a equity specialist, so I can talk more and more about equities, but probably I think enough has been sent on that. So there are various asset classes: real estate, then fixed income, equities. Then you also have, as you rightly put, some objectives like child's education, or probably for me, the objective of my life to create wealth, if I share, is that I create something for my son to start his own business. I don't want him to be a salaried employee like me all my life. So I want to rather make him start his own business as soon as he completes his studies. So that's my wealth creation idea for myself.
Right, right. So, Vasant, I'll come to you now. And of course, we are talking wealth creation, and I started with how people have these very basic questions on how to build this kind of corpus. And sometimes, Outlook staff, which is not Outlook money, also ends up asking such questions. So, internally, also, we have kind of questions like that, which is a very valid layman question. So, what are some of the misconceptions that you would say people should fight when kind of deciding what wealth creation means for them as an individual?
Sure, Nidhi. I think the first step is what you mentioned, which is having a goal in place. Like you said, the 5 crore number. For others, it could be different. I think traditionally, wealth creation has been defined by many as income generation, accumulating assets. I think these days there's a different meaning to it. The more modern meaning is financial freedom. Uh, I think, in my view, wealth creation is done when you have your assets working for you. In the sense, your assets are generating more returns for you versus you having to kind of depend on that. Uh, I think some of the don'ts or the wrong things that people generally do these days is they assume history is going to repeat for good as well as for bad reasons, in the sense that equity has been giving 20% returns over the last few years. That's going to take place. People's choice or selection of certain products is also dependent on how it's performed versus looking at how it may perform. So I think that's a bias that should be avoided generally. But I think generally people have this whole notion of having a professional advisor, getting your assets advised by them, getting your finances arranged by them. I think it's still important for people to have their own education about what they think from a strategic point of view. They should have a view. It's not necessary that they have to implement all of that. For a tactical product selection, asset class selection, how to kind of enter, when to exit, they can definitely depend on an advisor. But I think it's with the explosion of content, advice, commentary on social media, I think it's become more and more important that everyone has their own view. It could be right, it could be wrong, but you're as good as the professional advisor that you're working with. So I think it's important that everybody develops their own view by learning themselves, so that they can course correct whenever they feel something is going wrong, but they're doing it on their own confidence and on their own instinct.
Right. So, Sushant, you were mentioning that, primarily equities. And equities is something that, of course, have the potential to create wealth, is what the common understanding is. And to a large extent, numbers also prove that. But still, when it comes to equities, could you give our audience some of the strategies that they should really adopt when going on this path? Because we are talking retail investors, and we've seen in our presentation that a lot of them do not go to advisors. So either they are doing it on their own or on the advice of friends and relatives. So of course, the first thing is to go to advisors. But what is, if they are DIY still, then what are the strategies that you would suggest?
Equity investing as such is very simple. You need to be in the market for a long period of time. You need to be invested in good quality businesses for a long period of time, and you will, I would say, achieve your objectives. So just two things: be in the market for a long period of time and be in good quality businesses for a long period of time. Just two things you have to do. Now, how do you do? Because the first one is very easy, that you have to be in, there for a long period of time. But while it sounds easy, you need to be disciplined of, I would say, investing it at any point of time, as well as being invested. So controlling your emotions is something which is very difficult to achieve. And we have seen in the past, whenever market gives knee-jerk reaction, there is a propensity, and it's not just true for retail investors. I would say we all are human beings, and the emotions are across. So whether it's a HNI or whether it's a retail investor, they all go through the same emotions of trying to, I would say, preserve and conserve whenever market gives you drawdowns, right? At that point of time, there is a propensity to get out of the asset class when is actually the time to get in the asset class. So control your emotions for being in long time. As far as being in good businesses for a long period of time, I would say that do it yourself. If you want to do, then probably just look around what are the good businesses which you like, which and have very few of them. Don't invest in 20, 30, 40, 50 names. It's very difficult, right? Especially unless you are full time into investing, don't try to invest in more than single digit businesses, because you should be able to track them without putting effort. So just by looking at news or listening to views or looking at, let's say that I'm going around and earlier this product was selling more, but nowadays this product is not in the shelf and at all, right? So what's happening? Is there something wrong with the company? Just those sort of simple observations, I think, can make you super rich if you are invested in good businesses for 20 years, 30 years. And we have seen many stories that people who have been invested for 20, 30 years in a single business which has been growing, they create immense wealth. And remember another thing, that equity returns are non-linear. They are not like fixed income where every day you will earn. So if you are earning 15% a year, that doesn't mean that you will earn 1.25% return every month, right? Or every day, and so on and so forth. Equity returns at times for 2 years, 3 years, you will not make any returns. But suddenly in the fourth year and fifth year, you will make, and I would say make up for the last 3 years and 4 years as well. So be patient. As long as the business is growing, as long as the fundamentals are good, continue to remain invested, and don't broaden your investments into too many of such investing. So concentrated portfolio which is equally monitorable and are good quality businesses, and stay invested is, I would say, a simple way to create wealth through equities.
Right. So, Deepak, another thing, when you talk about equity investing is people love to follow, the kind of questions that come is which sector is in flavor. We had a question after the last session that, mid caps and small caps are in a rally and what should we do around it. So, there is a sense of greed and fear that goes with the market. And also, what is your advice in terms of choosing the sectors or stocks for wealth creation?
So I think that's a very good question, because it's difficult to time, even for market participants, people who are looking at the markets every day like us. We don't know really. I mean, of course, we'll pretend to know, but we will also mostly not know when certain things turn and all that stuff. So difficult to make an exact prediction on this. But I would say this: first, diversification. That's something that you get in a stock market, which you don't get, let's say, in a house. In a house, you'll spend all your money in one house. You'll probably take a loan to buy that one house. It's that one house. So until you get the money to buy houses in different places, different cities, you don't have diversification. And typically, while that has worked for people, it does not work so well in stocks. If you put all your money in one stock, so you want to diversify across sectors in general. Now, whether you will go after one sector versus the other, it's difficult to predict. If I told you last year at this same time, the best performing stocks in this year will be PFC and REC, Power Finance Corporation, Rural Electrification Corporation. They have not nothing for years. And yet those were 400%, 300% returns in the last 1 year. It's difficult to have that insight to where markets will go. But what I would say in general is diversify across. Don't worry about overvaluation. Overvaluation can breed even more overvaluation over the long term. Famously, Alan Greenspan, one of the most famous Fed governors, once said in 1996 December that markets are irrationally exuberant. Stock markets are irrationally exuberant. बहुत ज़्यादा हो गया है. But after that, the market went up another 30%. And then it fell. But it fell to a point which was still above the point at which Greenspan had called it irrationally exuberant. So even Greenspan could predict hum kya cheeze hain. That's the overall thing. But I think over here you might find pockets where you might say the certain, if you're a stock market investor, you might say certain things have reached a point where the fundamentals have deteriorated. That is when you want to sell your stock or your sector or something like that. But I currently don't see it. But I'm just saying that if something comes where the core fundamentals, core earnings, or a hit to earnings happen at a company level or at a sector level, then you do have a problem. Saurabh mentioned earlier the chemical sector was facing headwinds. Now, if you're a 1 year, 1.5 year investor, that is probably the call you would take is, I don't want to be in this sector for 1.5 years. But for a longer term investor, it's probably more an opportunity. So you're looking, if your purpose is more passive in nature, then you just want to diversify and stay in all of these sectors, regardless that one sector has run up a lot. Usko rebalance kar do thoda sa. If something has reached too much in your portfolio, reduce it and put it in something else so that your portfolio is more balanced. But you don't need to actually take timing calls on sectors unless you're a professional and you want to bet on something like that. That's a different. That's a profession. That's a business. It's like if I'm a store owner, should I have more Lux shampoo, some Lux soap or some other shampoo? Is a decision I will take, and I will live with the consequences of that decision. But I'm the shop owner. As a passive investor, I don't have the ability or time to make these decisions. So that may be, I may be giving you wrong advice to time sectors because I'm in the profession. That's all.
Right. So another question that often comes across is, and I'll give it to you, Anshul, is like recently somebody asked, the stock market was in a bull run, and they said that is it the right time to just withdraw my money? So I asked that, do you need the money? No, I don't need the money, but it has grown so much. So how do you tackle those emotions or those questions? Sometimes they are very valid. Now they have understood that, that thing that we say that, you sell at highs and buy at lows. But still, that decision becomes very confusing for a lot of investors at a lot of times.
Absolutely right, Nidhi. I think it becomes very confusing because especially when you have invested in an asset class and it grows, so then you are in at a juncture whether I should sell, book profit, or continue growing. So the simplest answer to that is you should have an asset allocation. So let's say you have basis your risk profile and the time in your life where you are investing, because how much time you can give to that investment. Let's say your allocation to equity is 50 and to other asset classes is accordingly. And now since your investment has grown, so that allocation has swelled to 60-65%. To that extent of 15%, sell it, book profit, and rebalance it. So that rebalancing is something very, very important. मतलब आज ज़्यादा स्वीट खा लिया तो कल थोड़ा ज़्यादा वॉक करना भी ज़रूरी है ना, 2 दिन थोड़ा उपास करना भी ज़रूरी है, तो वो भी इंपॉर्टेंट है. सो अगर आप रीबैलेंस कर लेंगे तो सॉर्टेड है, लेकिन अगर वो रीबैलेंस नहीं करेंगे तो देन हम खुद ही कंफ्यूज हो जाएंगे 1-2 साल बाद कि नाउ व्हाट इज माय पोर्टफोलियो लुकिंग एट. So you wanted to look it like a something X and it will look Y, and then you will be confused. So वो rebalancing ज़रूरी है. थोड़ा ज़्यादा खा लिया वो भी अच्छा है, थोड़ा भाग लिया वो भी ठीक है. So that way you have to rebalance it. Otherwise हम हमेशा confused रहेंगे कि क्या करना है. So I think allocation wise rebalancing is the answer to this.
Okay. And when we're talking equity, we cannot do without talking about risk and return, the relation between that. So Vasanth, if you could, shed some light on that.
No, absolutely. I think equity is one of the riskiest asset classes. So I think the other thing that's happened more recently and will continue to happen in India is the number of asset classes will keep increasing. Like there's been, again, a mushrooming of different types of assets that an investor can look at. Within that, the kind of exposures, the risk profiles, the instruments that you can actually use to kind of take these exposures will only keep increasing. So I think it's a good time for the investor because they can choose from a wide spectrum of different products and asset classes, but understanding the risk profile is super important. Like the same thing that you were asking, I think, say Deepak or Anshul as well, where how do you kind of allocate, like within equities itself, assuming that you have an asset allocation plan, within equities itself, you can have your view on how you want to allocate between, for example, say an active, a passive, something that can beat the index, something that can track the index. Within the active part, how do you choose to allocate between different sectors, between different themes is something that, again, you take a view on. For example, say in my thing, it's more 50-50. Within active, I take a view on saying, I think defense is interesting, manufacturing is interesting. Say Deepak has a small case that I subscribe to, which is around market leaders. So there are those bets that I take, and if some of them go wrong, it's completely on me. But a majority of, say, my active or the entire of my passive is something that keeps rebalancing by itself and continues to generate in the long term. So I think it's about having that plan right from day one, and like Anshul said, continuing to rebalance whenever you see something change or doing it just on a periodic basis.
Right. And now I'm going to ask a very popular question that we all get, and to all of you. Which sectors do you recommend this year for 2024, especially given that it's an election year and there's a lot of buzz? So, I heard someone saying that, okay, the same guy, okay, that the market is in a bull run and I should, book some returns. But oh no, the elections are this year, and the present government is expected to continue. There'll be a further jump, so I should wait perhaps. So there is a lot of excitement in terms of buying and choosing of sectors in this season. So I'll start with you, Sushant.
Quite interesting. One of our sister concerns, our research team, they put in a survey last year to all the leading fund managers in terms of what's your view on the GDP growth, what's your view on crude oil prices, what's your view on this sector, that sector, which sector you think will win the 2023 as such, right? And they published a survey recently in terms of what people said and what happened in 2023, where GDP will grow, how crude oil prices will be in the range, etc., etc. I think most of these questions, they were very, I would say, close to what really happened. But which sector will work, right? Which sector will not work, was the, I would say, the most, I would say, difficult question, in a sense that whatever people said, exactly opposite happened, right? So how things are there at the beginning of the year not necessarily will be the same at the end of year. So very difficult to, I would say, choose a theme for the year, right? Because you can say that this looks value today. So banks looked value at the beginning of 2023. Probably at the beginning of 24, they still look value, right? And the numbers, the credit growth has been superb as such. But there are other issues, whether it's deposits compared to credit growth and so on and so. There are many things which play out. So banks not necessarily created value in 23, despite most of the leading fund managers backing that as the most promising sector. So I would say that my viewpoint is that don't go after a particular sector or a particular theme for the year. Take a 3 or 5 year view, and from that perspective, I would say a simple thing to do is invest in India. Investing in India, I think, will make money for sure. Uh, this sector, that sector will keep on happening. Choose good companies, diversify your portfolio across sectors, and create a winning formula for next 3 and 5 years rather than worrying about what will happen in 24.
Tough question. I wish I knew, but again, what I will say here is India, and I would agree with Sushant here. India is powerhouse, and we live here, so we're probably very biased. But I see more development happening both at rural levels and at urban levels. Of course, Bangalore still does not have roads, but ठीक है. That will eventually get our metro as well. But if the idea here is in the long term, if you look at the next 10 years, I think this is going to be really India's decade going forward. Also, relatively speaking, India seems to be at a much better position compared to the rest of the world. वहाँ पे inflation अभी start हुआ है. We have seen inflation. We know that it is not right to give freebies and too many subsidies and all that stuff. The foreign countries are now starting to, had increased subsidies substantially during COVID. They're seeing the impact of inflation come on them. So in that context, the difference between US inflation and Indian inflation has come down to less than 2%. US is now 3 something, and India is 4.6 as of last this thing. This is something that has not sustainably lasted in the past, and we've had it for a while now. I think the idea here should be to bet on developing sectors within India. I do think that in the next 10 years, the leaders of the market will change. Some of the people you think today are large caps will not be large caps. Some of them will become small caps, but some of the small caps will become large caps. It's the nature of the market. You will have to have your bets in all of these quadrants so that eventually you're able to get a lot more. And I say this, my small anecdote. My father passed away in 1997. He left us a bunch of shares. My mother does not know how to sell shares. Even now, she does not like selling shares. 40 companies, of which only 7 survived. After 20 years, the whole portfolio has given a 40x return, but only 7 survived. So focus on the winners, not so much on getting rid of the losers or anything like that, because that is not so important to your overall growth than the fact that some stocks will win and win big. I think the idea here should be long-term thought process. 2024 will be exciting, interesting, 2 big elections, but I think you should market serve the purpose of entertainment as well as enrichment, right? So sometimes choose the entertainment factor and don't let it touch your money. Talk about it at parties, but your money should be more safely invested.
Right. Anshul and Vasant, you have something to add?
So quickly, so जब हम structural growth trajectory पे हैं, fundamentally, structurally we are growing. I think the best sector is Nifty.
I know we're running out of time, so I'll keep it quick. But unlike my panelists, I'm not registered to give advice or this
Okay.
thing. But so I can't give a theme of the year.
Yeah.
But in line with the theme of the event, I can definitely suggest a strategy to people. I think people should invest towards retirement more proactively beyond, say, the PF, NPS, etc. I think there are a whole host of products, be it retirement mutual funds, be it Horizon Smallcases, for example, that people can use to kind of build that nest egg. I think that should be something that people proactively do going ahead versus doing it more passively.
Right. So not just equities, perhaps a diversified portfolio that can help create wealth. We are out of time, but I will definitely take 2 questions because I know Zinnia is telling me not to do this, but I got special requests yesterday that you have to take questions when you are in a panel. So 2 questions. I'm just negotiating with my own team. Yeah, please.
Hello, this is audible. Yeah. My question is, it was also raised for the previous speaker, कि market इतना भाग गया है, पैसा निकालो नहीं निकालो, right? Nidhi also raised this point during your discussion. 2 years back, when 18,500 was the high, many people came to me, and I made them buy a 19K December put and sit tight to protect the gain, right? When it went down, I made them come down to 17 and book some profits on that downflow also. Same thing I did. Today, those same guys are sitting on a 22K, right? December 24 P. What my question to you guys are, why is it that none of the corporate people that I took, I'm not a customer of any of you, which is sad, but I'm customer of some of the other logos out there. Nobody ever comes to me with a holistic solution, right? It's only equity as if it exists in isolation. They don't look at a complete holistic. So what stops you guys as the domain experts to actually give a much better solution or an alternate solution to these kind of scenarios?
So I'll take this question. So एक तो आपके पहले क्वेश्चन का होता है, आपने कहा ना मार्केट बहुत भाग गया है. तो जब 3,000 का 6,000 निफ्टी हुआ था तभी लोगों को लगा यार 6,000 हो गया, बहुत भाग गया है. 6 का 8 हुआ तो फिर बोला यार ये तो बहुत भाग गया, अब क्या करना चाहिए. 10 हो गया, फिर लोगों ने बोला यार ये तो 6 का 10 हो गया. तो प्रॉब्लम ये क्या है, निफ्टी और सेंसेक्स इज अ रिफ्लेक्शन ऑफ योर इकोनॉमी. तो ये तो जब तक इकोनॉमी ग्रो कर रही है ये वैल्यूज बढ़ती रहेंगी, तो वहाँ तो आपको घबराने की जरूरत नहीं है. सेकंड क्वेश्चन का आंसर देता हूँ. जो आपने कहा कि कोई हमें होलिस्टिक सोल्यूशन नहीं बताता है. प्रॉब्लम हमसे शुरू होती है, हम होलिस्टिक क्वेश्चन नहीं पूछते कि हम सोल्यूशन क्या ढूंढ रहे हैं. हम ये बोल रहे हैं आप मुझे शॉर्ट टर्म बताइए, पैसा कहाँ लगाना चाहिए, मेरा पैसा मुझे यार 5% 7% ग्रोथ नहीं चाहिए, मुझे 25% ग्रोथ चाहिए. उसका आंसर डिफरेंट है. और आप बोलो मुझे कंप्लीट फाइनेंशियल प्लानिंग करनी है और मुझे आगे रिटायरमेंट की भी प्लानिंग करनी है, तो उसका फिर आंसर डिफरेंट है. तो उसमें यही कहूँगा मैं, जो मैंने पहले भी बोला था कि यू बैलेंस योर पोर्टफोलियो. लेट्स से इफ यू आर ईटिंग एवरीथिंग यू विल स्वेल, बट इफ यू डोंट एक्सरसाइज you will not stay in shape, so you will become out of shape. So for your portfolio to be in shape, you have to keep rebalancing, and if you are making some good profits in certain asset classes, you book profits and rebalance, put that money into the other asset classes so that there is a proper balance. अगर आप बैलेंस डाइट नहीं खाएंगे तो हेल्दी नहीं रहेंगे. तो अगर आपका पोर्टफोलियो में बैलेंस नहीं रहेगा तो हेल्दी नहीं रहने वाला है वो. तो दैट्स द लॉन्ग एंड शॉर्ट ऑफ इट.
Yeah.
Okay, I think
Hello.
there were 2
Yeah.
questions in one question.
Yeah,
So
one more here
I
now.
am sure our experts will be available to answer some other questions outside. I'm so sorry for
Yes.
this, and thank you so much, gentlemen, to be part of this conversation.